Hey, this is Matt from InvestiQuant. Today is Thursday, October 26, 2023. Yesterday, the market sold off, making a new 50-day low. We're going to take a look at what has happened historically following that when opening lower. I've got all four instruments set up is based upon entering long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. And we are trading lower in the overnight session. So from the gap direction, I'm clicking on gap down. The next thing I'm going to do is go to the price patterns library, and I'm going to grab from the active today the day after the lowest low of the past 50 days. So this is based upon where the low was made in the trading session, not where the close was made. I've shown that before as well. But this is based upon where the low is at. I've got that selected. The next thing I'm going to do is go to the indicators library, and I'm going to grab an indicator that says below a 200-day simple moving average, and then I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping down following the lowest low of the past 50 days that closed below a 200-day simple moving average. Historically, we have 61 samples here in the S&P, 60 in the NASDAQ, 68 in the Dow, 92 in the Russell. Win rates on these coming in a little bit light. S&P 48% have closed above the opening print. NASDAQ 42%. Dow 50%, Russell 49%. Take a look at the average moves. Average move to the downside larger in the S&P. For the NASDAQ, it's the average move to the upside that is larger. For the Dow and the Russell, both have larger average moves to the downside. So historically speaking, this pattern has been a little bit weak, with it being weakest in the NASDAQ on a win rate perspective, but the others have larger average moves to the downside. Hopefully you found that helpful. Good luck today. We will see you next time.